Hello, everyone. Welcome to another glorious day over here. We're very excited as always. Wednesdays are a very fun way to start the day over here. So if this is your first time joining us, my name is Sadie Uribe, and I'm the media producer for the Los Angeles Regional SBDC. The SBDC is a national program with over 1,000 locations across the country, helping to stimulate economic growth through business advising and development. We offer no-cost services to the local businesses through funding provided by the U.S. Small Business Administration, SBA, and from the California Governor's Office of Business and Economic Development, GoBiz. And let's see, we're clicking over here. We love technology, Lori, because I got myself so ready, but look, it doesn't like me. Well, I'm going to tell you who we are. Oh, there we go. Who we are. Now it got too ahead of me. Maybe we're going to go with where we are and then what we do. Where
Well,
we
and
are.
you're not actually stating you're not sharing your screen, but that's okay because you had the speech down good. I didn't want to interrupt you. Yeah.
Even better, we love technology. Well, the Los Angeles Regional Small Business Development Center Network serves small businesses throughout Los Angeles, Santa Barbara, and Ventura counties. And what we do, I'm going to tell you this because you can't see my screen. We offer no-cost business advising, meaning that you can meet one-on-one via phone or Zoom to address your specific needs and challenges. And we also offer virtual training, comprehensive workshops to help and adapt and grow your business. So on that note, I'm going to stop sharing, but it says I'm not sharing. So there we go, Lori. Back to your gorgeous face.
Good morning, Sadie, and welcome everybody back from the holiday. Sadie and I were talking, and at first I was like, well, should we have a show on Wednesday? People will have the holiday. I don't know if they'll want to be here. And Sadie reminded me, oh, yeah, our frequent flyers. And look, I already got 26 of you here today. So thank you so much for being here and welcome. And this is kind of like the last holiday before I always think of us coming into the fall. It's the last yaha, and then all the kids are back to school, right? Parents, yay, kids are back to school, right? So let's get started today because we've got an exciting show as always. I know we say that all the time, but it ends up being that way. So with that, here's my September lineup. Now I've got my one of these days I'm going to change it to session 3. I keep noticing that when I go to do it, but I got my 3 sessions. Sadie's putting the correct information into the chat like she always does. I've got the legal structure and tax advantages. I'm repeating that on a monthly basis. Please, guys, please, before you go fill out the paper or hire like a legal Zoom, get the correct information every single day, sometimes 4 times a day. I'm working with clients that do not understand these legal structures and just took bad advice. I spend as much time helping people dissolve a bad choice on a legal structure as I do create it. So I always say, go to YouTube for DIY projects, go to TikTok for fun little dancers. Do not go there for legal, tax, and finance advice. Okay. That is not the best place to get that information. And if you have questions, Sadie always puts my email in the chat. Reach out to me before you hit that send button with Zoom and choose a legal structure. Today, I'm going to talk about business license. That's our chat for today. So business license, I know a lot of people get confused, especially a sole prop might think that the business license is the DBA. I get asked that a lot. So I want to give some clarity on business license. So let's give some background. Prior to us doing a lot of our work online, working out of the home, at the kitchen table, online, before all that existed, if you were in business, for the most part, you had a brick and mortar, right? And when you had a brick and mortar, the local jurisdictions, think like Pasadena, Long Beach, the local jurisdictions, they charge a permitting fee, a license fee for you to have your brick and mortar. The fees that were collected go into the tax coffers. That was a way for them to make actual more tax in that area to pay for things like roads, etc. Those might be on a state level, but you get what I'm trying to say. That was a way for them to collect additional taxes. So on along comes everybody's working online now. They're working out of their house. They don't have a brick and mortar. Of course, those taxes suddenly decreased. And government doesn't like it when taxes are not as much as they collected the year before, right? So now we get born a whole new set of business license. Now, business license are under the jurisdiction of different local areas, like City of LA has a business license, Pasadena has a business license, Long Beach has a business license, but they all are under their own domain. So they're going to be a different cost, and they're going to also be called something different, perhaps. You'll see the name called home occupancy permit sometimes. That means if you're working out of your home. So when you want to know, do I need a business license? Do I need one? The first thing you want to do is you can even Google and then go to the site that is associated with Long Beach, like the city of Long Beach or the city of Pasadena. You go to their website, right? And there's going to be a section under business license, and you look up under that section if it requires you to have a business license. Now, the key words to look for, and this is across a lot of different permits and rulings, is doing business. The words doing business. Now, it sounds like I'm making like a little slang, doing business, but doing business is actually kind of a legal term, right? So what it is basically saying is if you're doing business in Pasadena, you require a business license. So this is where it basically comes under the umbrella. I'm working out of my apartment, sitting in my kitchen table, selling products online, I'm doing business. Now, another thing that people get confused about is they think when I make a sale, right? Now, making a sale is doing business, but purchasing expenses, setting up a bank account, that's doing business as well. So it's not that you don't need a business license until you make a sale. You need a business license when you come in doing business, okay? Now, when it comes to being traced back and you didn't have a business license, can you get caught, etc., you always have to look at the paper trail. And what they're able to do, if they choose to, is they can see that you filed some kind of form in your tax return, like a Schedule C. Mostly it's sole props that may not have it, or LLC. They'll see a Schedule C on an address, and they can look up and say, well, does this business have a business license? I do see the city of Los Angeles doing that. So if you're operating in the city of Los Angeles, I would get that business license right away. I've seen them check. I've seen them set out nasty letters. I've seen them apply penalties. Okay. So you definitely want to if you're under that jurisdiction. I haven't seen other places as aggressive, but that doesn't mean they may not be. Now, it does become tricky on my end when you're in an unincorporated area. I'm always having to look up when people say, do I need a business license in La Cunada? Do I need a business license in Lakewood? These different places, you got to figure out what the jurisdiction is because they're on a local level. So do check in. If you don't have a business license, check in your area. You need any assistance, let me know. I'll help you on that. Okay, upcoming shows. Next week, we got Jamie. She's going to come on, and it's going to be a really wonderful, feel-good discussion all about. Oh, my slides just went away there. It's technology. Okay, I'm back again. Know what technology is going to do today. But Jamie is coming on. It's going to be empowerment. And it's really interesting because you're going to learn about her journey where she did some research and discovery into the human spirit and what it is about the human spirit and what it takes to succeed and how fear plays into it. And, that's entrepreneurship. Okay. So you're going to learn a lot of information that applies to being an entrepreneur. And then I'm having Dahlia come back on. She's been on before. She owns DF Accounting Services. I asked her to have a discussion about finding a good tax preparer. I get asked a lot. I need a good tax preparer. Is my tax preparer good? So we're going to talk about that amongst many other things regarding accounting. And then Kathleen from my frequent flyers, she was on not long ago talking about her company, Jack's Concrete. She's going to come on and talk about the selling edge. She was speaking of some sales training on the show, and everybody just resonated with it. And guys, if you're an entrepreneur, you're also a salesperson, whether you want to be or not. So I've asked her to come on and give us good sales training. So I'm very excited about that as well. Okay, today we're going to have a fun discussion. And one of them that you guys really love to hear about, because we're talking about financing, we're talking about funding, we're talking about money, getting it, not being able to get it, and what you do when you can't get it. All of those topics. And here to talk with me about this important topic is Max A.Ordonez. He is established entrepreneurial executive with diverse hands-on experience in strategic and financial management, accounting, operations, and project management. As a business advisor, Max has an emphasis in two areas: financing startups to more established small and medium sized enterprises, and procurement contracts with governments and large corporations. Max, welcome. Welcome to the show.
Good morning. Good morning, Laurie. Good morning, everybody.
Thank you so much. Now, for those in the audience, Max is also a fellow advisor at the SBDC, and we've worked together on many different projects. And Max and I can go off on these long conversations where we, start out with one topic, and before you know it, we're both on the cell phone still chatting away. And I've often thought, Max, some of our conversations that you and I have would be so interesting to entrepreneurs. So that's why I'm so glad you came on the show. We're going to have one of our conversations, but we're just going to let everybody listen to it. So that's how we're going to work today. One of those conversations where we jump all over. So let's start out by, as a fellow advisor, you're part of the ACT team. Let's talk to the audience and say, what do you do with the ACT team? What is the ACT team? That way they get an idea of what your expertise is and what our conversation is going to be about.
Yeah, the ACT team is a access to capital team. It focuses in the three counties of Santa Barbara, Los Angeles, and Ventura counties. Really focused on identifying businesses that are seeking funding for their businesses, usually to expand or they've identified additional services that they may want to add, or an additional product that they may want to launch, and they want to grow their business. And we assist in preparing them for to meet with the lender with their loan package, right, the documents, and be able to communicate with the lender what they want to do, and what are they trying, what money, how much money are they seeking, what are they going to use it for, and how are they going to pay that back? Because that's what the lender wants to hear. How am I going to get paid back from this endeavor, from your current business, and possibly even what other collateral you may have. So that's something that's really, really important.
It's interesting, Max. Well, as been a banker, I never really enjoyed that. I wanted to be a banker because I wanted that information and that experience. And to be honest, that's completely why I did it. I got out of my MBA program and I had been around company CEOs and working with them. And I was like, there's something banks look at that I don't understand, because I would sit in these meetings and I would feel like I'm not on the same page with them. So I actually decided when I got out of my MBA, before I started my company, continued to get in busy with my company, that I was going to go become a banker to see what it was that I was missing. I just knew I was missing something, right? And it was a fascinating discovery, because what I learned is, as the entrepreneur and as the CEO, I thought banks were like looking at, oh, look how cool my product is, and look how cool my service is, and they love the idea, right? Right? I thought that, Max. I was the same one. I thought that, and then I was like, oh no, they take 2 minutes, look at my numbers, and then they decide whether they like my product or service. And so, something that you said just now, banks look at how they're going to get paid back and what is collateral. I just decided, let's start there, because business owners don't understand how much that plays a role. Any words of wisdom you can tell us on that?
Um, yeah, just kind of look at it from a perspective. If you're going to lend someone money, that you want it paid back, and you want to be able to have a clear plan for them, for that particular lender, how you're going to pay them back. And I think one of the things that it's really important is, once you identify the exact amount of what you need, be very exact. The last thing you want to say in any situation is, I want to borrow as much as I can. That's not a good answer. Be very specific. I think that's one of the things that I think a lot of maybe some of the younger businesses may say, because they are interested in having reserves. You don't want a loan for reserves. You want it to be put into action and actually have a return on that money for your business. So be very exact. Do your homework. Go get the quotes from whether it's leasehold improvement, your construction person, go out and seek, is there new permits, right? I think you talked about business. Am I going to need another type of business license?
Yeah.
Is it really a change to my business when I'm going to pursue this particular new service or product, right? You get quotes from manufacturers on what the equipment is. Obviously, the quote is not going to be good for more than maybe 30 days at the maximum, especially right now, maybe even 15 days, that quote may be available. Be very specific in everything you do. I think that helps the lender really say, this person really knows what they want to do. We are, yeah, you have to be able to provide confidence, right? And I think one of the things, Lori, is the passion, right? You talked about being passionate about your product, which is most entrepreneurs are very early stage entrepreneurs are so passionate about what they're doing. It is going to impact their industry. It's going to impact the customers that they're targeting. And that passion is important, but also being able to be specific in the numbers, be able to provide numbers to them, and how and understanding the pricing that you're going to be able to provide for that service or product, what the actual direct cost is related to that particular product or service. When someone knows that, and it's something that needs to be reviewed. You can't just sit there and say, oh, this is what I'm going to price, this is what it costs me. Taking advantage of some of the other resources out there. Talk to a mentor, someone who's been in the business. Talk to someone, again, SBDC or an advisor, someone who could review what you've analyzed, what you're putting together. I think that feedback, that feedback is so important, because they're going to ask you the tough questions.
Yeah, they are.
How did you get to that number? How did you get to that number? And I mean, a little more specific than that, but that's how you begin to develop a better business plan, a better strategy, a better business model. And sometimes you realize, wait a minute, maybe I don't want to expand into this area. And that whole process is really important.
And you mentioned, pricing for the machine or pricing for this. The other thing being usage of funds is knowing how you're planning on spending the money, because a lot of people will not only say as much as I can get, and then they go, what are you using it for? Well, I don't know, I might need it for this. And, tie into it. It's an old-fashioned banking term, but it's still relevant today. How banks view character. There's the 5 C's. I think it's the 5 C's if I got it right. And characters being one of them. And how your documents you present and how you present does help impact the decision, right or wrong. It does. And people don't know that are not in the scenes like you are, Max. So what would you tell for people to have advice about their documentations and their presentation when communicating with potential lenders?
Have your currently in the marketplace right now, what I'm seeing is lenders being very demanding for any business, whether it's a small startup business or a business that's been existing for quite a while, is having your profit and loss statement and your balance sheet. And they're not asking, 60 days ago. Like today we're in September, right? August, we just got through August. They want to see July.
I've heard this.
July,
yeah,
January through July for this year, and we want to see your balance sheet as July. And within the next 3 weeks, they're going to want to see August. So it's something that we need to think about. I would say a rule of thumb would be no later than the 15th of September, you should have your August financial statements, your profit and loss and balance sheet. The earlier the better, because that's something that they're gonna any lender right now is really asking. They want to know where a business stands as of possibly not as of today, but at least within 30, 45 days.
Yeah.
And not only that, when you're able to say, oh, yes, Mr. and Mrs. Lender, I'll send it right over in 5 minutes, as opposed to, oh, let me work on it. And then 3, 4, or 5 weeks later, you send it in, and then you're behind another month. I don't think that sends a message of confidence to
you know what, You're not the first person that's been working with the lender. I'm hearing this a lot, whereas we used to be interim and maybe it was the last quarter and it was still
Yeah.
okay. No, it's not anymore. It's like ever since COVID, they want a constant little snapshot to make sure nothing changed since yesterday. So really having an accounting system that'll allow you to pull reports quickly and not being dependent on another person who is catching up with the accounting from 3, 4 months ago. We've seen this, right? You know what I'm talking about, where they can't pull a more recent report. You really got to have your stuff together.
I think that's a very good example we have to learn from. Prior to 2020, okay, so you have second quarter through June 30th. Great,
Mhm.
that's fantastic. That's a good 6 months. We, as a lender, we could look at, we could analyze those numbers. Now they're saying, no, we want something within the last 30 to 45 days. Today, that would put us, we need to see your July results, where you're at as of July.
I'm
So,
hearing the same about forecasting too. Now they want you to so tell me about what are you experiencing with the lenders on the forecasting side? What are they asking for now?
right. So in the past, I mean, again, before 2020,
Yeah,
I would say,
everything changed. It did.
the forecast, oh, give me an annual forecast for the next 12 months, and then you give them a total for the first 12 months and a total for the month 13th through 24th, right? The second. Today they want a month to month forecast. So if we're drawing out a forecast today, we want a forecast between September this month through August of 2025. So that's a 12-month period. And an additional 12 months, which will take us to, I believe, August 2026, month by month. So they want to see on how much, what is your forecasted revenue for that particular month. And one of the things that we have to think about when we're doing this, it's not going to be something as simple as saying, oh, I'm just going to divide my last 12 months of revenue and average it out. And that's what I'm going to copy across the next forecast. I think there has to be some more thought to it. Seasonality is an impact. Some months are a little shorter than others. Depending what business you're in, right? The holidays could be, the second half of December may be a little slower. So it's not as linear, and it has to, they want some real thought behind that. And this is something that you want, even without the discussion of lending. It's something you want to look at and say, this is how my September looked last year. I want my September to look this year. It really motivates from a sales side to really begin to move that number, right? It gives you a benchmark. It gives you something to strive for as well. I think besides that, but also where you're going to be. And here's where my potential expenses are for that month. Oh boy, my rent's going to go up that particular month for the next 12 months. I have an escalation, right? Whether it's 1%, 2%, 3%. Or oh, I just received my new health insurance bill for my staff. We know insurance, all the insurance are going up, health insurance, general liability insurance. So we want to be able to begin to budget or forecast those dollar amounts of expenses, revenues, then our expenses. Then we begin to see what kind of cash flow results we're going to have. And so could it be possible that within the type of business you are, there's certain months of the year where you need cash flow? The answer is yes. And there's not a bad thing. It's just knowing that and preparing for that. And that's something that it's not going to be linear. It's going to be something you're going to have to put a lot of thought to it. And you could see the potential months where, yeah, there is a lot of cash flow left over for that month. I have to make sure I put that in reserves because the next month's going to be a little slower, right? And that does seasonality in any business.
Max, what you're saying right now is so important. And I'm just going to do a shout out to the audience, guys. What Max is speaking of is key. And like I said, years ago, you just would take an annual number. You would throw an annual number out there. You could use last year's P&L as an estimate. But I've had a client with the bank came back and they said they wanted their annual broke down per month. And I was like, really? That's a lot of work. They want it per month. And I was like, yeah, that's what they're asking. So you are actually supporting what I've just been seeing as well. And then I love love the second part that you're talking about is not taking and extrapolate and dividing, but literally saying, what is physically going to happen in this month? How many units are we going to sell? What are the bills of this month? And I think the takeaway, Max, is every company, independent of whether looking for a loan or not, should be doing it in that method anyway, because I get so frustrated with startups that just say, well, we're going to do 2,000 times 12, and then we're going to take our, no, life doesn't grow that way. Businesses don't grow the way people mathematically try to make them fit into a template. They don't work that way.
Right. And then, and just to think about, there's 2 months of every year where if you're paying every 2 weeks, you're going to have 3 payrolls. Okay, so 10 months out of the year, you're going to have 2 payrolls per month, but two of the months in that 12-month period, you're going to have 3 payrolls.
Right.
That takes on a lot of more cash, obviously, and it takes a little planning and being aware of that, and just seeing that as you're preparing the forecast, and you begin to see that, you go, oh boy, can you imagine if that's the slowest month out of the year, and then you have 3 payrolls?
Right.
And so there's nothing wrong where you may have a negative cash flow 1 month, and obviously you're going to have positive cash flow in other months. So let's think about a good example of that. So let's say you have and we saw this in the last few months. Last year was, if you have a business that relies on tourism, let's say, 40%, you rely on local customers, and 50 to 60% of them are tourists or local or whatever they're coming from. So the tourist season really kicks off in May, right? I think Memorial Day, May through September 5th. That's going to be the peak of a lot of those tourist businesses. If you look at, the weather's nicer, everybody's out, it's summer, from our perspective in California, and those months are going to be very high revenue driven months. Meanwhile, if you're relying a lot on tourism, certain months of the year are going to be a lot slower. So that's the kind of seasonality conversations you need to have. The more specific, what your business is going to result in, again, based on assumptions, right? We're basing in a lot of assumptions, estimates, and some knowledge. And I would go ahead and talk to people, other advisors, whether you have a mentor in your business or someone that you talk to, SBDC advisor or someone, to begin to have that conversation. Even that feedback, you're going to realize, oh, I do have to consider this. I do have to consider that.
Because the one thing going once again behind the scenes, and this was what I learned when being a banker, is that the bankers know and have access to all of the industry data. So even if you're a small company, they may look up and go, okay, tourists are seasonal. They're going to look at some numbers in the database of industry standards, right? Even though you're small, they still somewhat apply. Then they're going to look at your numbers and go, well, why are your numbers not following those same highs and dips? Now, if you come back and say, because we're all year and we have this, now that's okay. There's a reason. But if you follow the dips and didn't show it on the numbers, they lost confidence in your numbers. And so that's why you always got to realize that they're going to resources to see how much your numbers make sense, if I could just say it that way.
Yeah, and not only that, they have a lot of internal numbers. So let's say a plumbing company, let's say a local plumbing company, there's certain results that are certain results that they see from their other clients, and they begin to share that information and look into potential loan for another plumbing company. And why are the margins so different? If they're the same, they're not going to ask too many questions, but make sure that if there is a big difference, maybe one's residential service and one's commercial plumbing company. Well, that would make that a simple case where, okay, that's why they're different.
Yeah.
Well, maybe there's a mixture of both, right? Or maybe last year we were only residential, but this year, year 1, we were residential, year 2, we're commercial. And that's where you're going to have to communicate that very effectively and saying, this is what we've been doing. And these are the results from in the past, and those inflection points when maybe you added a new service in year 2 or year 4, and that changed the results of your business, or maybe you need to kind of pivot and go back a step and maybe relieve yourself of a certain product or service. Say, I'm not making any money in that product, so I'm going to drop it. My sales are going to drop a little bit. You're going to have to be able to explain why, right? Let's say you drop a service that you don't want to be you're not interested or don't want to compete in, but meanwhile you did launch another new service, and then eventually the result of that is in year 4 or 5. So there's explanations for everything, and any change in numbers, you're going to have to be able to communicate that in writing and then verbally as well, because you are going to have an interview. You are going to have to do not so much a pitch, but they're going to want to know that you understand the numbers you provided. So and they're looking to see how well you know your business as well. And then
they call that the story. And a lot of times entrepreneurs think it's the story of excitement about their product or service, but it's really the story also of how the numbers are looking, why they're looking that way, why they may be changed. And, I talk with the audience all the time, and I always say a lot of times for me to fix a company that's losing money is to tell them to do less, get rid of those underperforming products and services that they're losing money. Sales goes down, but profits go up. And banks look at cash flow, and cash is paid. Banks loans are paid back from profits, in other words. So cash flow impacts. We talked about the difference in reporting they're required. I want to go back to collateral. Are you seeing them asking for more collateral? How's collateral requirements changed? And first of all, what we need to do for the audience? Make sure they understand what the word collateral is, Max, before we answer that question. So talk to them about what is collateral and what are you seeing in their changes of asking for collateral since COVID?
Under the SBA program, if there's collateral, which usually means real estate, it could be an investment property, it could be your personal residence, it could be maybe a piece of equipment that they see that's very valuable that you may want to put up as collateral. In the smaller loans, non-SBA, they may even say, okay, well, we'll take a collateral on your vehicle because you don't owe anything on your vehicle, but we know that collateral on your vehicle, that you're going to pay that loan no matter what, because you need your vehicle.
Because you need your vehicle.
That was very common for a long time in the smaller business loans. I think that's back. Anything that is collateral, they're gonna usually the lender will take it. Okay, so now that you ask, if I don't have collateral, can I get a loan or an SBA loan? The answer is still yes, because if you don't have collateral, sometimes they'll look at it. They still look at it, and then of course, one of the main themes will be cash flow, right? What kind of cash flow is your small business or your existing business being able to produce and being able to pay back that loan, and then again, so that's what I see with collateral. It's not everybody has it, but it sure helps. It helps the lender to be able to say, well, there's risk in everything, and then I'm going to minimize that risk by having some collateral. That's how I understand the lender perspective. Correct me if I'm wrong, Lori.
Nope. I agree. I mostly tell people that for most, they want collateral. They want personal guarantees, the unsecured smaller loans perhaps, but I think if you're going for anything over, I usually say over 50,000. I know that's a little bit, you can go higher without collateral, but I'm kind of getting people prepared, right? But once you get past 35,000, it starts to be discussing collateral. And while we're discussing collateral, let's explain to the audience what a UCC filing is, why it matters, and this first and second positioning. I didn't know any of this till being a banker, but let's start unpacking a bit. So take us from collateral to a UCC filing, and then we can build from there.
Okay, so a good example of that is most businesses never had any type of loans other than maybe a business credit card. Business credit card usually is unsecured. Usually, I mean, actually they all are pretty much unsecured. So unsecured means there's no collateral, there's no lien on any asset of your business. Now, a good example is this: a lot of small businesses, and lot of small businesses during the last few years. When it was available, they took the EIDL loan, the EIDL loan. So what the EIDL loan did have a requirement that they were going to have a UCC filing on whatever business would they take that loan. And they took quite a while. It was kind of like, for some people, it took a year, some people 2 years. That filing never occurred because they were so behind the Small Business Administration. Today, if you have an EIDL loan, I do want you to take some time and go to California Secretary of State and do a search. Besides doing a search for your business, you're gonna, instead of there's two search types. There's business. Go to business search. Then there's two choices. You want to go look for a business or a UCC filing. So if you click on UCC filing, type in your LLC name, your corporate name, or whatever that may be, and then you'll see that you have a UCC filing on behalf of the U.S. Small Business Administration. Mm-hmm. And whatever the year was that you took the loan, so let's say it was June 2020. I'm just making up a name. I believe the lien is for 5 years, if I'm not mistaken. So that doesn't mean that in 5 years that UCC filing goes away. Usually that means the party, the lender, may extend that, so they have to refile it. So can you imagine that SBA is going to be refiling all these UCC filings again? So there's a lot of work for them. Remember, this is a lot of activity that is new to the Small Business Administration.
Right.
So why are we talking about that? Okay, so now in the scenario where I have identified a new service or maybe a new product, and now I want to take a loan on let's say a piece of equipment, just I'm going to make something up, $100,000. Many times, whatever lender's going to look that up, and they're going to look at, you have an existing loan with EIDL. That's wonderful. The interest rate is low. The payment is low. Not an issue. The issue becomes now that the lender, whether it's a bank or whether it's a nonprofit lender, a CDFI, a nonprofit lender, they're going to want to be first in line to your assets of your business. Besides the equipment, they want to be first. So now there's a whole process that that lender, with your permission, of course, they would reach out to the Small Business Administration and request them to subordinate their existing filing. And that takes some time. So that's something that if we want to seek a loan, we got to do it very early on, get pre-qualified, identify that piece of equipment, let's say early on, and then be able to begin to communicate with the Small Business Administration to subordinate their position to the new lender. Okay, that new lender may be a line of credit. It could be a equipment loan. It could be a working capital loan that you're taking out, a term capital loan to use for your business. So that does become very important. Now, if you've been in business for quite a while, I would suggest you, and you've had loans in the past, I really, really suggest that you do a search for your particular UCC filing, because in many cases, even if you paid off that loan, these lenders don't communicate to the Secretary of State that UCC filing has been terminated. It's the term they use. Yep. That means it's no longer existing. It's not. It's been closed, if you will, or terminated. And I found that sometimes during the loan process, the lender identifies, wait a minute, we can't continue with this loan. You have 3 other UCC filings from 3 other loans, and we're not going to do anything until you clear those UCC filings. So that's a good time. This is a good time for us to kind of learn that process, review where we're at, especially if you've had other loans in the past, to make sure that they've been terminated by that particular lender. Many times the lenders don't do it because these UCC filings terminate. They have a date, it starts, like I said, June 2020. And I think it's a 5-year. I think there may be a 10-year, if I'm not mistaken. But then they just lapse and they go away. They terminate on their own because they call it a lapse. So it terminates on their own. So these are the kinds of things that, especially if you're in business, had other existing loans, you may want to really follow up on that, because it takes time. It takes time. It's not something that's cleared like overnight, phone call. Oh yeah, sure. Let's fix that for you. You're gonna have to go to the right department. Usually, they're gonna do some reviews. They're gonna have to file. I look for that file. Luckily, if that lender has not been acquired, sometimes
Yeah,
that becomes an issue, right? So the lender
exactly.
was with XYZ company. XYZ company doesn't exist. Now the new company is ABC, and then they're struggling accessing all that old data. So that's why we want to be able to, before you even seek a loan, as you're seeking a loan, take a look at that. Just like if you would look at your credit, and
Yep.
just make sure that there's nothing out there that's incorrect, or that hasn't been terminated by the lender.
That's great advice, and I see one of our, Leah has put the link into the chat. Thank you so much. That's the exact link we're talking about. Thank you for putting that in there. And you know what, Max? I seen somebody going for a credit line, need it right away, ran into that same problem, took an entire month to get that off, and they really needed the money right now. And the SBA, like you said, they can be slow at doing it, but they're wanting to take a second position because they want you to bring in additional funding, right? So a couple quick things. These are yes and no, just to get out there. The idle is never going to be forgiven that I know of. You know, it's not forgiven now. I don't think it'll, my personal opinion, it'll never be forgiven. People keep still calling me and going, when is the idle going to be forgiven? And I'm like, you know, as we used to say, when the cows come home, it's not going to happen. You know, get it out of your head. The idle is a loan and going to stay a loan. Would you agree with me on that?
Yeah, I don't see it going away. I mean, there's a lot of outstanding debt on behalf of the government. I just don't see it going away.
No, I don't either. In fact, when they came up with the recent hardship program, one of the things I read about in the congressional reports, because I'm always reading those reports because I have to, right, is that there was at one point, I want to say at one point, a discussion about, you know, maybe writing off some of them. It's not going to happen because under the congressional language, the SBA must at least make a wholehearted, big time attempt to collect even $1 because it's taxpayer dollars, right? So they can't even write off as quickly as maybe a other lender would because they have a fiduciary responsibility to the taxpayers, and that's part of the legal provisions.
Right. And then there's so much of it was also wasted. So that's
Yeah,
another
yeah,
issue. So
yeah. It's a
I
hot
just don't see it
topic.
going away.
Yeah.
I don't.
Nope,
I
I don't either. One big thing I want to make sure we have some time to talk about. I go by the old name. They're not called this as much anymore, but these payday loans, our audience may not even recognize them as payday loans when I say like loans through PayPal and stuff like that, because they think of a payday loan as one of those little buildings that you see that are shady. But in actuality, they're not just the buildings, they're in mainstream right now. Can you
yeah,
talk and explain what they are
yeah,
and
you're
why
right.
you need to
Yeah.
be concerned?
Yeah. Payday loans, we think of a consumer, right? An individual goes in and
Right.
is in a position where they need to borrow ahead of something to pay something personal. Believe it or not, some businesses do use payday loans just to meet payroll, etc. And that's not a position we want to be in. So the other loans I think we're referring to are, I think they're called merchant loans or point of
Yes, I think
sale
they are,
service
Max.
loans.
Yeah, now that you say it,
Yeah,
merchant
yeah,
loans,
yeah.
that's what they're called. Yeah.
So they usually will contact you and tell you, oh, within 24 hours we could have a loan based on your total revenue, and then you send over your bank statements and you send over your point of sale system report, and then they come back to you, oh, here's $30,000. We have it for you in 24, 48 hours.
Yep.
Here's the agreement. You just have to pay us. And everybody's a little different. Some are daily, some are weekly, some are most of them are weekly, where they take the monies directly from your merchant,
Yep.
from your point of sale, and you never actually see it, and you're paying back that loan over a period of time. And if you look at the total amount that you will be paying, whether it's 30, 60, 90, 6 months or 9 months, whatever months, if you total it all up, it's going to be way above what you're actually borrowing.
Yeah,
So
the interest rates are not easy to see. They don't announce them. You have to do the math on your own. And you know what, Max, many times, I don't know if this is true across the board because I don't see the number of people you do, but when I did the the old fashioned calculation, I got higher interest rates than a credit card.
Yeah, I've seen as high as 55%, 40
Whoa. Yep.
on a particular loan. That is very, very expensive. What these companies do is the timing, right? They promise that 24, 48 hours in your bank account, which in fact, they're pretty quick in that sense. They're very quickly in depositing that, and that's where a lot of people find themselves in that situation where I do need this money tomorrow. I get, through the SBDC as well, we get phone calls. I get phone calls. Received phone calls. Oh, I need a loan, but I need it like right away within 2 weeks. Let's talk a little bit about loan and timelines.
Yes.
um,
Good thing. Yes.
so we talked about a very high interest way of doing that is these merchant POS loans. It's very, very expensive, and it really hurts your bottom line. But and it's very difficult now for those loans now to be refinanced by lenders. Before, there were some lenders who nonprofit lenders who really focused on helping small businesses because of these they just call them bad characters in the sense where they don't really even reveal the percentage that you're paying,
No, they don't.
which is probably something that needs to change. But beyond that, today it's kind of difficult to refinance old debt, but we could talk about that next. But I did want to talk about what was I saying? I'm sorry.
About the loans and the interest rates and not
Right.
being able to be seen. Because I was going to add another thing. When not only are they not shown, but Max, what I also see is because they're not apparent, the bookkeepers aren't not putting it on the financials. And I seen, because I've been correlating a tax return to the financials, that interest is not picked up on the tax return as a deduction because nobody knew what it was. So you're paying more interest and you're not even benefiting by having it as a tax deduction because the number isn't apparent. I wanted to add that. That was
Right.
taking you from your train of thought, but that I wanted to add too.
No. I just thought of that because you're right. There's a lot of talking about accounting and reporting, right? What these merchant, well, most of them do is they'll take the money direct, and let's say it was $200 every week, and then what gets deposited to your bank account
It's
excludes
less
the
than.
200. So
Yes.
then you begin to say, oh, I only reported so much in sales, but remember, you forgot the $200 that was.
That's what I'm seeing as an
So
accounting
so
nightmare
you
because
need to,
technically it's incorrect because you
yeah,
should tell the IRS the number plus the 200, and
but
I'm seeing a lot of tax returns being wrong.
I have seen the point of sale systems, the reports, they won't show that, oh, your actual revenue, let's just say it was $1,000. They'll say it's $800 because the other $200 was taken out. And sometimes these very point of sale systems are the ones giving the loans as well. So you got to be very conscious of that, because you have to actually, you want to record those $200 because that was actual revenue. So you're understating your revenue. This is a good example where, wow, my revenue went down, and then you're forgetting that, oh boy, that's right, there was an outstanding loan, and those funds were being taken out.
Yeah, see, these are the kind of conversations that Max and I end up having because I hope we didn't lose you guys, but what's happening is because this money is being taken directly out from your account, you're not showing it on your financials. Technically, to the IRS, you're underreporting your revenue, and then you're not showing the interest. And I don't know, I haven't seen a precedence on the IRS coming back on it, but I've been seeing it so much, I'm starting to have discussions about it because I don't think the IRS is going to allow the underreporting of revenue saying, but I didn't report the interest, so it doesn't matter. I think it's incorrect reporting, and the reports need actually hand calculations put into them because you can't just link the bank statement. So Max, anybody who has one of these merchant bank loans, I could almost guarantee you their internal reporting is incorrect. It's understating their revenue. And then it's also showing incorrectness on profitability. It's throwing everything off. It's throwing everybody off. Hope we didn't lose your audience, but this is a key point because I'm seeing more people with these merchant loans than you would think, or I would think, and I'm quite surprised by the number of them. And I'm seeing more merchants get in the game because they're lending you money on sales they already see taken because they're the ones that are, organizing the sales or, doing the payments for it. So they're taking very little risk. They're taking the money off the top and they're getting paid more than even the most riskiest loans. I think it's crazy.
Yeah. And the way they lure the businesses is, oh, the money will be there in 24, 40 hours. So
Well,
this,
we pay for instant gratification a lot and we pay bad for it, don't we? We know that personally. Instant gratification doesn't always help us, does it?
so this is where going back to tying this back to the forecast is
Yeah.
exactly why, if we're able to look at our forecast and there is 1 or 2 months where our business is a little bit slower in revenue, but the expenses, at least the fixed expenses, are consistent, we're going to have a need of cash flow for that 1 or 2 months. And the last thing we want to be in a situation, obviously, we want to have reserves, but you want to have enough reserves for that period. Or you may need to actually seek some financing. Maybe it's a new client that before they were paying you every 30 days on your invoices, now they're paying you 60 days. That could impact you, depending on how big that particular client is in your portfolio of revenue. I mean, clients.
You
So
really have to
I've
know
seen
your
that a lot.
numbers. It's coming back to you have to know your numbers. You have to plan. And I think you always had to plan, but I think with the lending getting even harder and tighter and you having to have more documentation, your need to plan ahead is even more so. I think it's just crucial. While we've got just a little bit, but I want to get out one more of my little pet peeves, I would say, Max, and that's I'm getting calls every single day asking what grants are available to start, what grants are available to start my company, or I'm a fill in the blank, what grants are available. And I try to explain to people that grants became a mindset of having more availability during COVID, but the COVID grants had a congressional underwriting that said all you had to do is experience the disaster through FEMA funds. It wasn't specific about a small company, a large company. It was, did you experience the disaster just like a hurricane? Well, then you're available to have the funds. So this concept of these grants being overly available for all companies and all situations isn't really a truism. And too many people are now seeing that as the way to start or run their company. Can you comment on that, Max?
As far as startups, well, let's talk. There's two sections: startups
Okay.
and existing business. So in a startup, I always get those phone calls. Oh, I want to start my business. I need $1 million. I need a grant so I could start the business. And I'm like, boy, if I knew where that $1 million grant is,
I get one myself.
I get
Exactly.
one myself, right? And I want to say that, but I don't want to
Yeah.
say, but I want to say that. Then I can say that here because we're among friends here. But the right now, I'm not aware of any grants to start up. And if they do, they pop up from a particular corporation, maybe for a little bit, and they say, hey, we're going to have grants of $1,000 up to $50,000, which means 50 people. And then there's
Right.
10,000 people apply, right?
Right.
So keep in mind, even if a grant does come up, the odds of receiving that grant are very, very slim.
And it's a small grant. It's not you're not gonna run or start a company on that money.
Right. And so as far as I would say there aren't any right now. Don't think that there are any. It's probably better. But and then as far as for an existing business, as far as grants, they would be super, super specific. They would be so specific that whether it's I saw one for agriculture specific to water savings. They have to be, I mean, it was just this very
I seen one
specific
recently.
scope
It
of
was
work, and it was very difficult where, okay, I could see very few companies who do that, and they're usually larger companies who have like research and development departments, who could develop what they're looking for, or they're able to apply for that grant. So it's really, I see more grants more in the research and development space, whether it's energy, whether it's any type of energy or any type of maybe potentially something the government would use, maybe, but very specific.
Yeah, and I seen them sometimes I'll see them in, like, community things, like a drug rehab house or something like that, but, you have to have been in business, you have to show the bonding, you have to show financials, you have to go through a whole process. So, to do it because you wanna do this or a startup, no, you have to prove that you have been doing this for years, you have a running existence, you have a track record. So, grants are going back to being what grants always were, they're
Right.
just for a select few, and
And
that's it.
and that and the grant has to be a doc. Usually, it goes back to a very lengthy technical document. Usually, a grant proposal, and
Yeah,
being
exactly.
so that's the kind of grants that have been always traditional there. And I think there's not a grant where, oh, I just apply and I'm a small business, and um not anything really simple or anything. It's a bit more specifics.
Yeah. And so people kind of
Very narrow, specific,
yeah,
and usually in the technical area, you have to be
yeah.
quite technical as well.
I think they just gotta get over it. Don't look for the grants or the government funding to start a company. You know, while we're speaking of starting or even ongoing companies in general, I get asked a lot on what type of companies. It's one of those that you never have a good answer, okay? Because it's one of those generic questions that isn't really a worthy question of answering, but nevertheless, I have an answer, right? But I get asked, what companies do you see that are succeeding today? What companies do you see are doing well? And my answer, just because I'm looking at numbers all the time, and it's not an answer people would think. And I always say it's the solopreneurs. It's the person who I'm going to, could be anything from a massage therapist to a consultant to somebody who's making some product by homemade product and selling it. These companies that in the past you'd say, you're a lifestyle business, you don't have any employees, you don't count, you're not a real business. They'd be the ones everybody would insult, right? Those are the ones that I'm seeing are making money because they don't have employees, they don't have the workman's comp, they don't have the brick and mortar, they're selling their time, they're selling their services. I'm seeing these people pull in more money than the ones that have a bunch of employees. So that's been my answer. I'm seeing the solopreneurs are the ones that are hitting the jackpot now. What is your thoughts? What are you seeing on those out there that are succeeding, and answer it in any way that you see, Max?
I kind of see it the same way, right? I mean, who would be the most passionate, and if you ask yourself, who's the most passionate, who's gonna work to put the best effort in, who's the most invested person, is going to be the owner of the business. And in a solopreneur situation, obviously it's only one person. It's the owner,
Right.
the passionate person, the person who's fully invested, the person who knows how to do the technical work, and who could deliver the service or potentially a product, right? That's going to be the individual who's going to be the best employee, right? In my opinion, it's always going to be the owner. And so that's where the solopreneurs become very profitable, because they're able to, but they also work, I mean, long hours. I mean,
Yeah.
there's no doubt
Yeah.
about it.
Yeah.
It's not, I get emails that, well, sometimes when I'm up late at midnight and 1 o'clock, people are still working,
Yeah.
they're still working, thinking things through, sharing ideas and getting feedback, requesting feedback, because they're working all the time. I mean, that's just something that so they're the most vested, they're the most passionate, and I think that really helps the solo entrepreneur be successful because of that.
Yeah.
Now,
I mean, I
as
like
far
being
as there are some other businesses that are successful. I think one of the two things that I didn't think about when I started, I had two other businesses with partners. I think one of the things that I think that we don't talk about, and something that we could talk about in another podcast, is really talking about kind of leadership, what kind of leaders we want to be in our businesses, if we want to grow into employees, etc. But even as a leader, as a solopreneur, you have to think about as a leader, right?
yeah.
And the kind of culture you want to build it within your business, kind of culture you want to communicate externally to potential employees, externally to potential clients. I think that's something that I don't think we spend enough time on, just because we're so busy, on the day-to-day, answering the calls, sometimes dealing with crisis, those
Yeah.
crisis phone calls and emails, and I think that's something that we don't put enough time into it.
I think so too, Max. I want to add one thing on that too is and this is my personal feelings and experiences. It may not be a shared feeling or experience, but I feel like since COVID, I have had more negative experiences dealing with companies like they don't follow through or you can't get somebody on the phone. It seems like just day-to-day purchases are sometimes a little bit more challenging to get somebody to follow through. So when I work with a company or an individual and they return calls and they're communicating well and they're showing leadership, right? They're showing leadership and I have a confidence in them. I can feel the confidence. And lately I'm like, I'll have 3 bids. I'm bidding out a lot of stuff right now. And it's like, okay, this one's a little bit less, but this person I felt like he or she was really on top of it. They displayed confidence. They told me exactly what's going to happen, how it's going to happen. I'm going with them. So I think good old fashioned customer service, good old fashioned communication, and good old fashioned speaking with confidence is a competitive advantage nowadays. Again, what do you think?
Right. I mean, some of the lenders that I work with, um, I text them and get an answer or something quickly, or I call them and they answer, and that's the kind of lender I want to work with.
Right.
From my perspective, because I'm working with various clients, and they want this process to go soon as quickly as possible,
Yeah.
right? I mean, we all do, right? Because
Yep.
we want to be able to say, okay, let's sign, let's get this loan,
Yep.
let's do that investment, let's grow our business.
Yep.
And I see that from lenders that I like to work with because of that. That's probably the reason I say, oh, I really want to work with this lender. I want to they all provide the same product, but this is the lender I want to work with.
It,
You
it's
begin to it's that customer service and being accessible. Even when I text somebody and they say, I'm on a Zoom meeting right now on a podcast. Can I call you back after the podcast after 12 noon or 11:30? Oh, okay, good. At least you communicated. So that's one of the things I think I look for in people. They communicate quickly and say, and it's okay to say, I'm not available today. I'm right in the middle of a project, or I'm really finishing something up, or I'm teaching a class today all day, and I'll contact you first thing Monday morning or whatever. That even communicating to me, that communicating is good customer service,
I agree. I
right?
agree.
But when you try to communicate with somebody and at that moment, yeah, it was urgent to yourself, and you don't hear anything until 2 days later, it may be too late because you got an answer from someone else.
Well, Max, can you believe it's an whole hour? We're actually over.
Wow.
And I know. I told you we would have a lot to talk about. Max, like, well, what we I go, you and I can ramble on forever. This has been a fascinating discussion. I could tell from all the comments in the chat, in the audience. It's a great conversation to have and one that many people are not exposed to. I think we had like 61 people or close to 61 people at one point on the show. So this is a hot topic. So Max, thank you so much for coming on. It took me about a year to get you to come on. I'm
Oh,
going to get you to come on again now, right?
yeah,
Now
we
you're
have
going to be like,
yeah,
okay,
there's going to be some other topics that I think that from
that'd be great.
feedback from everybody will be helpful, what they want to hear more about. I'd love to do it.
Because I know you had a standing Wednesday meeting and couldn't. So the minute I found out you didn't have that, I knew you
Correct.
were going to be an
Correct.
excellent guest to come on. So guys, reach out to Max. His information is there. He's also, like I said, a partner at the SBDC with me, a partner in crime on the ACT team. He can talk to you about your numbers. Yeah, you like that partner in crime? I always use that expression. I guess that's not a good thing to talk about when you're talking about the government and banking to say a partner in crime. I got to find a different slang. But anyway, reach out to Max. He is a wealth of wisdom and knowledge and can take a look at your numbers. And you guys know how to get in touch with me as well. And Sadie, I'm going to bring you back on. And as always, Sadie is going to stay behind to make sure the chat stays open so you can get my information, all that information out. Max and I are going to click off in a minute. So Sadie, welcome back. Another great show, another great discussion.
I mean, I needed like my notes pad for this one. I mean, I was just like, wow, this is so much good information here.
I know, I knew it was going to be. So with that, Max and I are going to click off. I'm going to say to all our frequent flyers, thank you for being here. Thank you for being here on after a holiday, especially. So thank you for watching Small Biz Talk with your host, Lori Williams, and I will see you again next week. Bye, everybody.
Bye, everyone.
Thank you.
Bye, Max. Thank you.